All right, so hello, I'm Kate Fuller, and this is our fourth week of this webinar series. And today we've got Eric Belasco giving us a cattle market update. Next week is our final week for this portion of the series, and Joel Schumacher will be talking about the latest on the stimulus package for individuals. We are thinking about doing some more of these or uh, generally putting some more information out there. So please let us know via the Facebook group or directly through Carrie, or I think you have all of our email addresses, what you'd like to see and what might be useful to you. So without further ado, I'm gonna stop sharing. So I'll hand it over to Eric Belasco.
Thank you, Kate, and I will share my presentation. Okay, so thank you, Kate. So Kate asked me to just give a cattle market update, and I guess I did some of these like back in April when there was a lot more uncertainty, and things have definitely settled down a bit since then. So I'm happy to report from a less volatile market. Although things are constantly changing, we were talking beforehand about how the coronavirus food assistance program came out with its second iteration, and I just saw it this morning, and they were saying that there'd be about $55 a head for beef cattle. So that's another thing to keep in mind that I'm not really going to talk about here, but is certainly something that we'll be looking into over the next couple weeks. So, and really the starting point, going back to the middle of February, looking to see where we are and kind of where we've come. We see here two lines. These are just the futures market prices over time, starting in February and going till now. And you can see the feeder cattle market has, improved. I think, if we think about the economics behind that, the market signals of getting cattle to market. When we were seeing these drops in March and April, really some bottlenecks on the processing side, and some of those market signals saying to hold your cattle a little longer. We can't really do much with them. Processing capacity is a little constrained. And since then, we've seen a bit more pressure to have cattle move through the market. So I think those price signals are moving up. So if we compare the prices today to where we were on the middle of February, feeder cattle, they're up 1.7%. And for live cattle, they're still down about 12%. And so those markets have moved quite a bit over the last couple of months. But as we'll see, the volatility has really shrunk in those markets. And one important thing I think is, so when I say these futures markets, they're often due at different times. And so one of the notable things I think was that really the futures market contract that really suffered from the coronavirus were contracts that were due in May. And that was because if you had a sale, if you were planning on like a spring contract last May, there was a lot of uncertainty around that. And so prices fell dramatically. And you can see here, these are the different contracts. So the red line is that May 2020 contract. And you can see that it is substantially lower than the other ones. Obviously, in the middle of May, those contracts expire. But we can see that the other contracts, whether you're talking about a November contract, a January contract, or March 2021 contract, those have all kind of moved very close to one another. So really a lot of this uncertainty was for sales last spring. And we've seen some consistency in the market for contracts due, whether it's in fall, winter, or next spring. And so this is, the graph I've shown quite a bit in the past, looking at the feeder cattle market and the fed cattle market. And really to take it a step further, like one of the sort of largest, most confusing things about the last few months has been the divergence between the feeder cattle prices and retail prices. A lot of ranchers have seen their prices fall while you go to the store and those prices are up. And so there's a lot of market segmentation. And we definitely, that had a lot to do with the bottlenecking at the processing facilities. One way we can measure some of that is to look at the ratio between the feeder and fed cattle futures contracts. Um, and as we can see, they've sort of come back. Feeder has been a little bit more optimistic lately than the Fed futures contracts. The ratio between them is fairly high, so it's almost at 30%, meaning that there's a lot of pressure on feeder operations to get their cattle through the supply chain. So there was a bottleneck, and now some of that volume is starting to clear out. Um, Although, even with that said, I guess I'll stick on this for a second. This is kind of what the data says. When I talk to, ranchers, it does seem like there's a concern about, the result of that bottleneck, and that it's not quite over yet. And so, even though the data suggests that there's a lot of incentive to move cattle through the market, I still do hear from people saying that there's been a bottlenecking. One of the good signs recently is volatility has come down. You could see that that big spike during coronavirus was really unprecedented. It's hard to think of a time when we saw that big of volatility. You probably have to go back to the BSE outbreak to see a market volatility of around 50%. And that doesn't indicate that prices are going to move up or down. It just indicates that they were moving up and down. So there's a lot of movement in prices. Um, People didn't really know, like, are these supply bottlenecks? Are they going to persist? What's going to happen? And so one of the nice things is that in the last 4 months, we've seen volatility come down to a kind of an average to below average level, which I think, as far as planning, we're getting into late fall, well, early fall. Um, and as we start to think of prices, kind of a low volatility is a good thing to have in mind, because that means that we're not really expecting the price to be moving a whole lot. So with a high market volatility, you could sign a contract and the next day you could see a huge price change. With low volatility, we think, okay, in general, we're not really expecting that price to move a lot. So there's not a pressure to, make it today or versus tomorrow. There's just not a whole lot of daily movement, which I think is a good thing when you're trying to sell cattle. Um, and then just a couple more things that I'll end on here. Just talking a little bit about trade. Trade has been one of the things that I've been watching pretty closely. And as far as beef goes, we haven't really seen a lot of adjustments to the long-term projections for our exports and imports. A lot of our trading partners haven't really been, our trade relationships haven't changed substantially. So think about, our trade with South Korea. The trade deal that we have with them is still in place. Um, and so that's still working through. Our trade relationship with Japan hasn't changed. Canada, Mexico, with the re-signing of the USMCA, um, really kind of made those trade relationships continue. And so, even though there might be some uncertainty with trade as far as new trade deals, we haven't really seen any changes to our existing deals. So, exports and imports, kind of a flattening out expected of those. If we look to some of our major trading partners, we see a little bit of change with Mexico, which has a little bit more to do with just the exchange rate down there. And we'll see the flip side of that in terms of imports. But in 2020, Japan and South Korea, those exports holding strong. And that's good news. As far as our imports, we can see again the flip side of that Mexican, export exchange rate. We see in the imports higher imports, lower exports. Canada has maintained, and then we see kind of normal trade relations with Australia and New Zealand. So I would say, like, with all this market volatility happening, kind of a normal trade relationship is good news for the cattle market. So just going forward, 10 minutes is a fast time to go through the cattle market. Remaining concerns, supply adjustments are still occurring. just the types of meat, of beef that consumers are purchasing changes. We see a lot less people going to restaurants, more people eating at home, and that results in different cuts of steak, different cuts of beef. Um, for example, I know when I went to Costco, like the price of tenderloin was like almost at hamburger price levels. And so you just see kind of some of that movement. And, if the processors can sort of shift through that, we'll see those prices normalize a little bit. But those adjustments are still occurring. Um, we are definitely keeping an eye on the economic outlook, both in the US and then also globally. Global recessions are not good for exports. Because most of the beef products are what we call normal goods, lower incomes usually result in lower demand for those products. So, potential domestic and global recession outlooks are problematic. And then finally, what is the trade outlook? I think for beef, we're always looking for the next market. Um, and I'm not quite sure how we come out of coronavirus and what our approach is to trade. Are we sort of more trade? I think right now it seems like we're probably a little less pro trade than we were, before this. And so I'd say kind of those, looking at some of those future markets might be a little slower than we had anticipated before. So thank you for your time. And with that, I will turn it back over to Kate.
All right. So if anyone else has any questions, feel free to unmute yourself or type in the chat box. I have one to get started, and it's a question I feel like I get a lot when I talk about the cattle market. And this isn't something that we talked about beforehand, so sorry. But why do we both import and export beef? Why don't we just produce all of our own beef in the
Yeah,
US?
that's a good question. So, the majority of beef that we produce is consumed in the US. About 90% of what we produce is consumed here in the US. But then, for the most part, we have other countries, particularly if we think of South Korea and Japan, who want to pay, they're willing to pay a lot more for kind of those higher quality cuts than US citizens are. And so we can export some of those higher quality cuts. At the same time, US consumers love hamburger. We consume a lot of hamburger, and you can only get so much hamburger out of a cow, especially when you're trying to cut out those higher quality cuts. And so a lot of our imports come from those lower quality cuts. We think of like Australia, New Zealand, Mexico, Canada. Those are coming from kind of the lower, more hamburger. And then we think of kind of the higher quality cuts. Japan, in particular, it's a very high income country and they pay a lot for their beef. And so we wouldn't want to exclude them from our process. So that's why we send some beef their way.
So it's really a quality story.
Yeah, yeah, and it's kind of a market segmentation story too, where we want to, um, where we demand a little more. The quantity demanded for us for certain products is higher than we can produce, and if we can get someone else to buy it for a higher price, then we're going to sell those other cuts to those other countries.
Yeah. Thanks. Does anyone else have a question before I move on to something else? Well, while we're waiting, my next question is, so you are pretty up on the cattle markets. This is something you spend a lot of time with. Where do you go to get the latest on cattle market kind of stats, or just if you want to like take the pulse of what's going on in cattle markets?
Yeah, so for me, I pay a lot of attention to the futures market because that's where I think we get a lot of information. Um, prices moving every day, and just keeping kind of an eye on that. So there, I'm looking at the Chicago Mercantile Exchange, just kind of getting daily updates on those prices. But
And
then
if you want to check into that, you can just pretty much Google like CME feeder futures and it'll
yeah,
come right up, right?
yeah, 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 and feeder futures, Fed futures, they're both sold on the same exchange, so you could Google those. Feeder futures are usually what we think of more for Montana. they're, the feeder cows that we're selling around here. That's what I pay much more attention to. In my previous life, when I was down in Lubbock, paying a lot of attention to the feedlots, it was the fed cattle futures contracts. Those are what the feedlots would use. Um, but yeah, and there's a lot of market information in there. The job of the economist oftentimes is then to figure out, well, why. So if we see prices going up or going down, to figure out why we see that. And sometimes they can be kind of temporary blips. Sometimes they could be, a big buy. But other times there could be larger shifts. And so for that, I'll go read. There are some nice, news outlets where I can go and get information, whether it's, beef.com or, Ag Week or different places like that.
So as we move into kind of thinking about shipping in the fall, are there sort of key metrics that you think folks should be paying attention to and tracking within those stats or elsewhere?
Yeah, well, I think the one is the lower volatility is good because a lot of times, like when you're getting ready to sell, you're kind of wondering, well, should I sell today, or maybe if I wait till tomorrow, prices will improve a little bit, or next week. And with low volatility, that tells you that kind of prices aren't expected to move a whole lot, which I think is a good should give you peace of mind for now, given that nothing else happens. It's much better than like a 50% volatility that we had back in April. I think making decisions at that point, I think would have been very stressful. But now I think, prices might not be exactly where you want them to be. They're probably on the low side, but that being said, they're at least pretty consistent. The other thing that, I look outside, and it's dry outside. And so I think across Montana, looking at the hay conditions and just what kind of supplies are out there, just to see how many animals are you planning to ship? Are you going to winter some of them? Can you afford to wait if you maybe want to do that? So yeah, the weather and then the prices are the two things that I'm kind of looking at.
And I'll say I've gotten some questions about custom feeding lately
Mhm.
and kind of the going rate for that. So sort of an increase interest in that maybe this year.
Mhm.
Um, and I'll say we don't have a lot of good numbers on what that looks like in terms of a going rate, but if you do Google around for custom rates, the Midwest has the most recent one. Their situation is a little bit different. You can go to North Dakota and they have some that are published from a couple years ago. So if
Mhm.
you're looking into that, those are some places you can go for resources.
Have you, Kate, just out of curiosity, have you seen like what are the rates like, or have you seen those rates right now? I'm just curious.
I mean, it's hard because they're not like right now rates, right? So I think the latest one that is from 2018. I don't remember off the top of my head what it is, and that's from Iowa State. So does that really
Okay.
reflect Montana
Yeah.
conditions? Probably not, because those feedlots are
Mhm.
probably a lot bigger. Um,
Yeah.
and
Well, and I guess I'll just say one thing. When I was at Texas Tech, I worked with some of the big cattle feeders out there, and um, I think that since I've been in Montana, I've noticed like there can be some skepticism about feedlots, about kind of the prices that they're offering. And I think my impression from especially those larger feedlots was that they would love for their business model just to get rid of all their risk, and they usually hedge quite a bit. And then just to charge a flat rate, 30 cents a day per head or whatever it is. And they just want that income guaranteed. They don't want to take on the risk of kind of market price fluctuations. And so, yeah, I'd say just looking at, if you're planning to retain ownership, in those feedlots, looking at kind of their history and what they do, and then what their rates are, and kind of comparing them is a good strategy.
sure, yeah, just calling around is a good
Yeah.
way to
Mhm.
get started.
Yeah.
Joel, do you have a question? You turned
Yeah,
your mic on.
well, I just wanted to get your thoughts on this spring when some of the larger packers had some labor issues keeping their workforce healthy, keeping their output flow. A lot of people kind of focused on meat processing in Montana. Um, and then the stimulus program is one of the one's added a lot of grants for those small packers in Montana to do maybe 10 or 15 head a week of animals to expand. Do you see that changing marketing opportunities for Montana producers going forward, or is that not going to change much in terms of the big scheme of how we market cattle?
I think that's a really good question, Joel. I've been trying to think of that too. I think there's an opportunity for it. So I don't know. I mean, because those things do take a while to kind of, to work out, to come out with a plan and to establish a product and sell them. Am I just thinking of kind of how culturally where people are right now? I think there's more of a demand for supporting more local agriculture. And so I can see the opportunities for kind of those more regional food systems setting up.
And we did have a talk last week from Tommy Bass talking about some of those local processing facilities. So if you want to check that out, you should. All right, well, we are about out of time, so I'm going to sign off. Carrie, are you trying to say something? You're muted. No, okay, sorry. All right, well, we have one more week. Again, it will be Joel Schumacher talking about the latest on the individual stimulus, and we look forward to seeing you then. Please feel free to send us questions and ideas for future presentations. All right. Well, thanks a lot. Bye.
Thanks. Bye.